The silent tax that you pay every day without knowing it. Let me ask you a very simple question. At the end of every month, when you look at your income and ask yourself, where did all my money go? Did you sometimes genuinely struggle to explain it to yourself where all your money are going into? You paid your rent, you bought food for yourself and your family, you transported yourself to work every day, you paid bills and settled some other expenses, you sent money to families, you bought data for yourself, you ordered some other things for yourself, you bought few things you didn't even really plan for it, and somehow the money is gone. But here is the interesting part. You may not have made one major financial mistake. The problem may be something much more dangerous, and that is as a result of small financial leakages happening repeatedly. And today I want to talk about what I call the silent tax that people are paying for without knowing it. It is the money you lose gradually through inflation, convenience spending, unnecessary charges, poor purchasing decision, impulse buying, and financial habits that look harmless individually but becomes expensive when doing it repeatedly. And if you don't understand this, you can increase your income and still remain financially frustrated. Let me break it down properly. The silent tax number one that we are paying for without knowing is called inflation. Let's start with the one that everybody knows about, and that is called inflation. Inflation simply means that generally prices are rising and the purchasing power of money is falling. For example, imagine if you have 100,000 naira today, if the price of goods is rising significantly over time, that same 100,000 naira may not buy the same basket of goods and service later. So even if the number in your bank, that is the 100,000 naira, even if it remains the same 100,000 naira in your bank, the economic value of what that 100,000 naira can buy may have reduced. And this is why I always tell people, don't only ask how much money do you have, ask what the balance in your account can buy. According to the Nigerian National Bureau of Statistics headline, inflation was 15.91% in June 2026, while food inflation was 17.52%. Now, I am not saying that you should be panicked. I am saying that you should understand what inflation means for your personal finances. Do you know why? Because if your income is increased by 10% while your major expenses are increased faster than even the money that is coming, I mean, that is your income, you may feel like you are earning much more money while your real purchasing power is not improving as much as your income is doing, or as much as you think. That is the first silent tax that people are paying for unknowingly to them. The second silent tax that people are paying without knowing is convenience. Now let's talk about something more personal, and that is convenience. As I said earlier, convenience is not bad. In fact, sometimes you should pay for convenience, but the problem starts when convenience becomes your default financial strategy. Imagine you are tired after work, you can cook at home, but you decide to order for food. Imagine you can walk a short distance to your house when you close from work, but you decided to take a ride. Imagine you can compare prices from 3 sellers before you make your decision before buying, but you decided to buy from the first person you see. You can plan for shopping, but you decided to buy things wherever you remember them. Individually, none of these decisions looks financially dangerous, but let's say convenience costs you an extra 1,500 naira every working day. 1,500 naira does not look so much, but multiplied by 22 working days, that is 33,000 naira. Now imagine doing that for the whole 12 months of the year, that is 396,000 naira, almost 400,000 naira, right? Just from one type of convenience spending. And this is the lesson. Small expenses become big expenses when they are repeatedly occurred. The question is not about I can afford 1,500. The better question should be, what is this 1,500 costing me over time? By the time you calculate it, multiply by the number of days in a year, you will know what it will have cost you. The third silent tax we are paying is impulse buying. And that is another silent tax, which is impulse buying. As I said, you enter a shop to buy one thing, you see something else, you now say, this one is nice, you buy it. You see another thing, you now say, oh, let me just add this one, you buy it. You get home only to realize that you didn't actually need some of those things that you have just purchased. The problem with impulse buying is that it doesn't usually feel like financial crisis. Nobody wake up and say, today I want to waste 50,000 naira. It happens in pieces. 2,000 naira here, 3,500 naira there, 5,000 naira here, another 7,000 naira somewhere. And because each transaction is small, your brain does not treat it as a serious financial decision. But your bank account does. Your bank account does not care whether the money disappears through one transaction or 20 transactions. Money that leaves your account is still money that leaves your account. There's no changes. So before buying something that wasn't planned for, develop one simple habit, and that is, did I plan for this, or did I just see it? These are the things that should be occurring in your mind. That one question alone can save you surprising amount of money at the end of the day. The fourth silent tax that we are paying without knowing is paying more because you didn't plan for it. Let me give you another example. There are two people. Person A plan his expenses, while person B wait until everything becomes urgent. Person A buys certain things before they become urgency, while person B wait until he desperately need them before he go ahead and buy them. Who usually pays more exactly? Very often, the person who waits until the last minute, because urgency reduces your bargaining power. When you need something desperately, you are less likely to compare prices before you make your decision to buy them. You may accept whatever that is available. You may pay for express delivery. You may even borrow to get it. You may buy a lower quality product simply because you don't have time to research for more other alternatives. This is why financial planning is not only about saving money. Planning can also help you avoid paying unnecessary premiums. Sometimes being financially disciplined simply means giving yourself enough time to make a better financial decisions. Number 5 tax that we are paying without knowing is bank and transaction cost. Now let's talk about something many people overlook. Some things like financial charges, small bank charges, transfer related costs, subscription charges, service charges, fees attached to some certain transactions individually. I know that they may appear insignificant, but when you are making many transactions, those little amounts accumulate and become a big amount of money. And here is something important. I am not saying that every bank charges is avoidable. What I am saying is that though some are legitimate costs of using financial services, the point is know what you are paying for. If money is leaving your account and you don't know why the money is going, that is a very big problem. You should be able to look at your statement and understand where your money is going. And this is especially important for business owners. You know why? Because if you mix business transactions with personal transactions and you don't properly track charges, withdrawals, and transfers, there will be a very big problem. You can eventually lose visibility over your actual cash flow. Number 6 tax that we are paying unknowing to us is subscriptions you don't use. Now, here is one that catches many people, and that is subscription. You subscribe to something 3 months ago, you stop using it, but the payment continues. Maybe it's a digital service, maybe it is an app, maybe it's for an entertainment, maybe it's for a membership, maybe it's a recurring services. The amount may look small, the amount may appear small to you, but here is the question. How many subscriptions are currently taking money from you that you no longer have value for, or that you no longer use that particular service? Go through your bank statement right now, go through your phone, go through your transaction history, look at your recurring payment. You may discover that you are paying for things simply because you forgot to cancel them. And that is another form of silent leakages that you are not aware. Number 7 tax that we are paying unknown to us is buying cheap instead of buying value. Now, this one is interesting. Sometimes trying to save money can actually make you spend more money. You buy the cheapest version of something, it breaks, you replace it again, it breaks again, you replace it again, it breaks again, and eventually you realize that I have bought these things 3 times. Sometimes the cheapest option is not the most economical option. So what matters is the value over time. For example, if one product costs 20,000 naira and lasts for 1 year, while another costs 35,000 naira and lasts 3 years, the second product may actually be cheaper over its useful life. So don't ask yourself on only how much does it cost today. Ask yourself rather, what will this cost me over a period of time I tend to use it? That is much more mature financial question. Number 8 tax that we are paying unknown to us is that we don't track small expenses. Now, here is where I think many people make a financial mistake. They track big money but ignore small money. You remember when you paid 300,000 naira for your rent? You remember when you bought your phone that you are using for 250,000 naira, for instance? But you don't remember the 1,000 naira, the 2,000 naira, the 500 naira, the 3,000 naira that disappear every few days. And those small amounts can become significant. So here is a simple exercise that I want you to give it a trial. For the next 30 days, track every single expenses, not just the big ones, everything, both transportation, for food, for data, for transfer to some people, subscription, the snacks that you buy, convenience spending, impulse purchases, and all of that. And don't judge yourself while tracking it. Just observe. At the end of these 30 days, categorize your expenses. Then ask yourself, which of these expenses actually improved my life? And which one simply happened because I wasn't paying attention to it? That exercise can completely change the way you see your money entirely. Number 9 things we are looking at in addition is that don't just increase your income, reduce your leakages. Now, let me make something very clear here. I am not against increasing your income. In fact, I strongly encourage it. Develop your skills, start a business, build additional source of income or income stream, negotiate better pay, create value product, do whatever you legitimately can to increase your earning capacity. But here is the problem. If your financial pocket has a hole on it or in it, pouring more water into it does not solve the problem. You need to increase the water and fix the hole. So if you increase your salary from 300,000 naira, for example, to 500,000 naira, but your spending automatically increased from 280,000 naira to 480,000 naira, you may feel richer, but financially you haven't created much additional breathing room for yourself. Your income increased, your lifestyle also increased, but your financial strength barely moved. That is why financial progress requires 2 things, and that is income growth and financial control. That is very important for you. The next thing we'll be looking at is that your money needs a job. You need assignment. Here is the principle I want you to take away from this particular video. Every naira that comes into your pocket, every kobo that comes into your hands should have a purpose. They should have assignment for you. I am not saying that you should become unnecessarily stingy. No. Enjoy your money, take care of yourself, take care of your family, give when necessary, travel when necessary, eat good food, buy nice things for yourself, but do these things intentionally. Don't allow your money to disappear simply because you were not paying attention. Do you know why? Because there is a major difference between I spend my money and my money disappeared. When you spend intentionally, you know what exactly you use that money for. You know exactly what that money goes for. When money disappears, you will not know. And financial confusion is very dangerous. So let me leave you with this. You don't necessarily need to become a millionaire before you can become financially responsible. Start by understanding where your money is going to. Watch the small expenses. Watch convenient spending. Watch your impulse buying. Watch your recurrent expenses. Watch your financial charges. Watch your poor purchasing decision. And most importantly, watch your purchasing power. Do you know why? Because sometimes the person earning more is not necessarily become richer. And sometimes the person spending less is not necessarily become the one that is so suffering. So they may simply have a better understanding of where their money is going and with the assignment their money is delivering to them. That is the only difference. Remember this, your financial life is not destroyed only by big mistakes. Sometimes it is weakened by small decisions repeated for years. And if you want to learn how to identify these financial leakages, organize your income, protect your purchasing power, and build a stronger financial future, I have created more detailed content on this particular channel for you. So don't just watch this video alone and scroll away. Go to my YouTube channel, subscribe, watch the next video, and let's build financial intelligence together. You know why? Because earning more money is important, but knowing how to keep, direct, and multiply the same money is another level of financial intelligence. Thank you. God bless you.